In yesterday's video, we were talking about how when the implied volatility for the SPY is lower, we should expect things to remain in their range. But lately, over the past few months, we've noticed that actually when we have a big range, we tend to see some slow trickling up price action. And when we do have a smaller range, we actually see something a little bit crazier. And that's exactly what we got today. So I would expect more of this going forward because I saw volatility. I don't know if you did, but I saw volatility on the right side of your screen here turn up by 11.13% today. Yet these ranges are still small. So one thing that you can do is realize that this market might be about to get a little bit nutty. It's going to be a very important time to trade like water and manage risk throughout these days. And another thing is, expect the unexpected. This is going to be an interesting December is what I think. And I think we got to get into some technical analysis for the SPY Qs, Apple, Tesla, Amazon, Nvidia, AMD, and Meta, looking over at AMC because also its friend GME has earnings tomorrow. And I think we got to pay attention to it because the market always goes a little bit crazier around GME earnings. So let's get into it. You guys know my take on the SPY. I think that the weekly chart looks like garbage. I think the monthly is at the highest point on the MACD that it's ever been, and this is the worst time to invest, and that goes back, and I would hold that true even 2 months ago. Even with this positivity, I would say as far as an investment goes, there's too much risk. There's way too much risk in the market, and the less risky thing would be to just wait for that monthly pullback. But that's my statement. But on that note, I want to be very clear here in saying I do not see reversal signals on the daily chart here. I do not see it on the RSI. I do not see it on the MACD at the same time. So that means that this most likely is going to end up turning around at some point. Whether that happens here or whether that happens here, that's why we pay attention to the short time frames. As of right now, you have tested top Bollinger, and if you want to go higher, a lot of the time you need to go down to the 20 before you can see that head back up. Example, right below you, test top Bollinger, go a little bit higher, go to the 20, head back up. So am I overly bearish right now? Not necessarily. I'm aware of those signals if they do confirm on weeklies and things like that, but I just wanted to get that out of the way. We noticed that the daily has not even crossed down for some kind of pullback, so we have to be paying attention to the fact that this market can head higher. Now, this has, like we talked about last week, you are going to see a day. I don't know if anyone remembers this during the live video, but does anyone remember when we just kept saying you're most likely going to see a day where you have 1 day's worth of price action wipe out about 3, maybe even 4 days worth? Well, you had that today. So let's get you guys some good information today. Let's really look into this and show that the 2-hour is just pulling back, and that 2-hour could flip up and we could see more positivity. This is a very bullish run, but we're seeing something very different in this run that we haven't seen in a while. We have lost that 5-day moving average. So something we want to pay attention to for tomorrow is the daily expected moves, which are small again. So we might have to expect a little bit more crazy price action, which is just so strange, but it's been happening for the past few months. 606.93 to the upside, and we do have 602.43 to the downside. Now, what were we saying during the live video this morning? Well, the 2-hour pulling back, if the Qs cross down the 2-hour, the most likely thing is to go down to that weekly expected move. Now we have a tight range again. The key thing with the SPY is 600. 600 is going to be a very, very key level because that is your big put wall, and it's outside of your weekly range, your 68% zone. So if we get down to 600, we test that. That can be where we bounce back. That happens to be where the 20 would actually catch up to the price action. So this would all be a great area for us to find some reversal signals, and that's what we're looking out for. Now, for the 2-hour analysis here, this is a divergence. You can see it very plainly on your MACD and RSI. Some wonkiness in the near price action, but a little divergence at the top there for a 30-minute. And we notice some downside. But the 2-hour is still positive. So anytime that wants to curl up, we can see more positivity. We can test that high. We can go make a new one. But I don't think that this downward pressure is over when we look at the 30-minute. So this is where we can really read into the 30-minute and say, what are the probabilities that really say like, hey, this is going to go into some massive positive trend? Well, the way that we would read into this is we've lost the 5. So in order for us to get back into that positive trend, in order for this to get across that center line, we'll have to see this take back the 5 and hold it tomorrow. That's going to be key. If we're able to hold it, that would be a good thing. But we do have a daily expected move there. We don't necessarily have the strongest base. The only thing you have at these lows down here is a very spread out 5-minute divergence. Okay, 5-minute divergence. Now that can cause a 30-minute to swing up. But we'll notice this does not have divergence at these levels. So if that swings up, yeah, we can see positivity. If we take back the 5, it keeps going. We cross up that 2 hour, everything's looking dandy. But if we actually move higher and we reject from that daily expected move or the 5-day moving average as it comes down, we'll see if this actually leads to more selling to the downside at this point. We do have some key levels, and the other key level is 606. 606 is actually your big call wall. So that's very interesting that now we're kind of below that, and we can use that as resistance. So what I'd be really paying attention to tomorrow is we can see a snapback move, and well, right now it's just saying this is going to continue, but if that 30-minute turns up, we could see a move up towards our daily expected move, and this is where you want to see who wins that battle. If that does end up curling back down to make a stronger base, we will pay attention to any kind of signals like this on the 30-minute for that 2 hour to rotate back up, and we'll notify you about it, especially in the mornings during our live videos or every single night on YouTube. Really look, the thumbnail that I put out on yesterday's video was the Qs, and this look here is not a good one. This is a divergence that wasn't there on the first one, so we curl down and then we pop back up, and you make a significant divergence. I do not want Bollinger Bands on the shorter time frames, my bad. So what we want to pay attention to is the fact that this could still go positive. This is looking a little bit better than the SPY. This is looking a little bit more like, hey, we could see a breakout moment, and then watch out if we make another divergence point in case it's a trap. We will pay attention to that for you, but the 30-minute for the Qs is looking a little bit easier to go positive at this moment, so I'd pay attention to that. It's holding the 5, so that makes total sense. But we do notice for tomorrow we have a small range, so I would expect the unexpected going into tomorrow. Something that makes me say, hey, if that does pop up, it most likely is a trap, is the fact that the 2 hour was able to cross, right, early on in the day, that actually crossed, and that has continued to go down. So the most likely thing for the Qs here is to end up down towards your weekly expected move, and we even made a zone in case that gets a little bit more frothy. 510 is a very important level for the week, so if we see some scary move down there, this would be very unexpected according to the options data. So how you want to read into it when it's unexpected, as far as the psychology goes, is if I'm an options trader right now, then even psychologically, even though I don't realize it, moves like this, I would kind of expect. And something like this can instill more fear into me. And if I let that fear take over and I don't see the reversal signals, I might not be able to see that this thing is going to bounce. So we'll pay attention to that for you. But I just want to be clear that the 2 hour turning down is leaning towards a reaction to that weekly expected move downside. But for the 30-minute, if we're going to get a reaction up, I think it's good to talk about it again for us to go over the bearish, the bullish, the bearish, the bullish, just really get both in our head so we can trade like water. If this crosses up, we can see positivity, and maybe we're able to even break through this, and then I would watch out if that fades throughout the day. The levels to pay attention to for tomorrow are 525.48 for the Qs to the upside and 519.28 to the downside. It's starting to get a little bit scary for Apple. If you guys were paying attention to last night's video, we really were talking about the fact that Apple was pulling back with time, going to probably test that 5-day moving average, right? You pull back with time, you catch up to the 5, and upside can be there. But you did make a little divergence point. Now, that doesn't mean we can't move sideways again and see another pop-up, but this is something that is surprising, is seeing Apple when everything, look at the side of my screen right now. Everything is red except Tesla's only up 0.15. Apple is up 1.61. So you wonder what stock really helped the market actually remain a little more elevated. We would have sold off harder if you had Apple doing what Nvidia did, down 2.55%. Those are two very big stocks. So what we want to pay attention to is the fact that the 30-minute could just be a trap at any moment, because you do have the divergence points holding all the way across this. You have it holding all the way across this, right? If I hold my mouse right here, you're going to notice that it's below that dotted line. That's important because it is there. So if the 30-minute crosses, if we see this cross down, this could be the moment where the 2 hour actually crosses down too, and now you've actually made a little bit of divergence here. Now, I don't think that's anything to be too scared of. I just think that this might be a daily pullback for Apple coming, and I think it will show its face by the end of this week. What you'll notice is if I do pull up the Bollinger Bands again, and we were talking about this with the SPY, we reacted to the top side of the Bollinger, and we really spread those out. We keep reacting to it. A lot of the time you want to wait for your opportunity to be bullish is when you retest that 20, and then you can head into the upward direction. You want to see that retest, and that's something that could come to fruition over the next, I would say, it could pop up this week even. So we'll pay attention to that for Apple. Just note that there are no big reversal signals here for Apple at this point for the daily scale. What I would be paying attention to is weakness early on in the day. If the 30-minute crosses down, watch for the 2-hour to follow. If this is just going to keep moving sideways and then make another move up, watch out if that is some kind of trap. This is getting real frothy to the upside. Tesla, something that we were talking about during the live video today was people saying, yeah, I'm trying to take calls on Tesla here. And I was just stating very simply, let the indicators do the work for you and tell you, hey, is this a good opportunity? Is this a bad one? Because yes, this stock, I know it used to have a short seller problem. It could just keep going. But my whole point to trading is I take opportunities when the opportunity is a good one, not when I think it is going to go up, right? I let the indicator tell me when to make that decision. When are the times to make that decision, even on a 30-minute chart for a little play? Well, it's when I see the direction chosen. We have taken back that 5-day moving average, and I see this thing curl down. I easily could say, yeah, I think Tesla is going to go up. I'm going to take calls right here. But what if that just kept dropping? That would be bad. Let the indicator tell me, ooh, right here. Okay, right here it says, okay, this is going to make another upward move. That is the most probable thing to happen, is to test this high, go make a new one. And right before that big surge, you actually crossed up at a price point of about 354.21, and you got a nice push for a few hours to 374. Very, very good push there. We curl back down, we curl back up. That's the opportunity. The opportunity is when the indicator is saying, yes, I am beat up, but I am ready for the next upward move, and that is the most probable thing. I just wanted to get that out there. As you look at Tesla right now, you have flat divergence across the top, but it just keeps moving up. If it keeps holding this 5, that is a good thing. The 2-hour crossing down is the thing to be worried about. That can start to cross down daily charts, even though it just looks like it'll be a daily pullback at that point for Tesla. But the 2-hour turns down. You want to see if that's able to hold up at any time, because that's still far away from the center line for Tesla. It just tells me, and the way that I've really talked about Tesla now, really kind of just saying this out loud, I think will help and help everyone else right now, is Tesla, for the most part, is really, really freaking bullish. Right? It is really, really freaking bullish. So on almost every single chart, you have to be willing to accept the fact that it is bullish, and that the easier plays are going to be when this turns down on a 2-hour and crosses back up, and then it just never crosses back down. Those are the real opportunities for Tesla. So is it an opportunity right now? It could go up, but is it a good opportunity? No, I would rather see the 2-hour come back at least down to the 5 and then curl back up. And what that would do is create that opportunity, just like it did right in here, just like it did right here when that opportunity was a good one. So I'm being patient with Tesla. It is extremely bullish, but I think it could set up a pullback opportunity in the near future. And I mean, even with Amazon, it's like, take the opportunity, right? The 30-minute divergence, the 2-hour divergence that turned down the daily scale, the 30-minute triple divergence that turned up the 2-hour. We found the opportunity right here. That's the key thing. If you want, I can even show you those divergences. Boom, boom, boom. And then we notice, bam, divergence right there, confirms up, little bit of wonkiness. I know I was a little scared here. Once you see that pop up and take back the 5, it looks like a good opportunity. That's what we are looking for. Does this look like a good opportunity now? No, it just does not have this look. If anything, looks like the opposite, right? We're falling down, we're going way too fast up, and most likely it's going to need a solid even 30-minute pullback. And that's the thing. Amazon is extremely bullish. So you have to be open to this 30-minute being able to curl up every time. And it really looks like, to me, if you get lucky, the real opportunity would be the 2-hour chart. If this 2-hour chart can go through a little bit of pain, come and retest something like 215, 214, and then curl back up into positive territory, you would have a pretty solid pullback. And look at the last time. Look at the last time. Look at the last time. Even this little one here ended up producing some good positivity. So I'm going to wait for the opportunities, because this is really, really high up. And if I take a call just because I think it's a good opportunity right now, I might get that ripped away pretty quick. Now, a lot can happen in the shorter time frame, so I just want to go over that one more time on the 30-minute here. The 2-hour pullback is, I think, the best opportunity. That is when we could see some downward price action or sideways for a long time. But does that have to happen right now? I don't think so. You have a bunch of flat divergences, and you're still relatively far away from that center line. So this could just retest something, curl back up, and then set some kind of trap actually at the top with a divergence on your MACD. That is pretty damn significant. And this is another reason I'm saying a lot of these things, expect the unexpected. We could get some kind of big drop that ends up saving itself, and then we get some kind of Christmas rally. Expect the unexpected, and that means trade like freaking water, right? Be willing to take profit earlier on positions, right? It means be willing to pay attention to a signal that is against your bias. If you are very, very bearish in a super bullish trend like this one, and you see a big drop and you get all excited, and then you ignore 30-minute divergences and 2-hour swing trades, it's going to be a big problem. Sorry, I had to itch my leg if the mic got weird. But this is what I'm saying for Nvidia. For Nvidia, we see this massive drop. What have we been talking about? And now everyone is talking about. We had a 30-minute divergence right here. Once that confirmed, we started to say, watch out for the head and shoulders. That was all the way back November 22nd. Now everyone is talking about it here. Head and shoulders, they play out in a million different ways. This does not have to play out the way you think. But if it does play out, that's awesome. You can see a measured move. We can see if there's reversal signals for this to make one more move up. Now, something to pay attention to here with the 2-hour is it is very positive. So a reaction up would be necessary here. And this is where you get into the 30-minute. The 30-minute looks like it wants to curl up. If that comes to fruition with a little, if you look at the micro here, we have a little cup and handle. Okay, do we see that move up? Do we fill a gap and reject from the 5? Because this is so deep into negative territory, you have to be willing to be open to a lower high for Nvidia on the 30-minute, where this could react up. It could even react up real good and then end up giving it away. And that would create a 30-minute problem, a 30-minute lower high. Now, from that area, I want to talk about this well into the future, right? I want to talk about not just what happened today and regurgitate, hey, this is what happened today. Like, you don't need someone to do that. You want to learn how to actually be a good trader. Try your best to make these scenarios for the future so you are ready to react to them and understand how these things really move. Well, what is this? This is a big drop down. If people are convinced, hey, the market can go higher still, well, then we might see a reaction up and they're like, all right, that's the bottom. But you know this is not the sturdiest base here. This is not a massive cup and handle. This is a 30-minute really deep. So if that turns down again and you see this, watch out, because a lot of people will be saying, hey, that head and shoulders is going to play out, and you might see a 30-minute divergence on your MACD right in this area. You might see this, and that is something we will be noticing, and that is something that I would put money behind at this point, because everything is very, very bullish right now. And until I see big weekly charts start to cross, that's going to be what I want to pay attention to. Now, what would that allow to happen? Well, if we can make some kind of base with the 30-minute and turn up this daily chart, you do have the chance still, if we can knock all this out, if we can do all of that over the next few days, we can end up seeing Nvidia actually cross through these levels and go higher. Now, the reason I'm saying that is because even though it did have divergence, we just noticed that on the opposite side of that spectrum, there is a slanted head and shoulders that is possibly setting up here. And I want to pay attention to that. Okay, so I want to pay attention to both sides, and that's why I'm talking very seriously about it right now. And you notice that if I draw this up and we're going to remain in this flagging for the head and shoulders, well, then we might react all the way down to something like 135 again and end up turning this thing back up. So this is what I would pay attention to. Now you have kind of the both scenarios, and no one is really talking. Everyone's so excited how clear this is, and I get it. And that could play out, and that's fantastic. That's great. You're not going to see any of these signals pop up. That's how that works. But if you see these signals pop up and they actually confirm, the most likely thing is you're seeing a head and shoulders in the other direction. It's just a little slanted and harder to see. AMD took an absolute vomit, and I'm going to tell you one reason that I'm not confident. I'm just not trading AMD at all. And I see people taking calls, things like that, and that's perfectly fine, but you never got confirmation. Remember, when you turned down, we called that this was a 30-minute divergence, and that was going to most likely retest this level. We gapped below that. That's very important. If we would have crossed up on the 2-hour, the most probable thing is to head higher and probably see a great move. And that's still can happen, but you're starting to see something a little crazy. The reason that I do not trade AMD at all right now is because of the monthly signals. The monthly signals say that this thing is not going to be pretty in 2025, and I am not someone who's willing to say, oh, it's going to get rid of that monthly signal. I'm just going to shrug it off. No, I'm not going to see a 2-hour divergence and think AMD is going to go up to 240. No, I'm not even going to see a 2-hour divergence and think that's going to go up to 170. It can, and that's fine, but those moves are likely to fail because of this monthly signal. You do have the divergence across the top, kind of flat, but you do have triple divergence on your RSI, and all of that confirmed 3 months ago. We made you very aware of this, that this would be a rough one going forward because it confirmed that signal. So just the main thing with this is paying attention to what's happening in the price action. You're not going to make another point of divergence. If anything, right now, you're just seeing this thing drop down and down and down and unconfirm a lot of the divergences you had here. You're now about to match the first point for where that divergence would have been made. You've already violated the great one here. And so even if this sees a snapback, and it very well could, it's outside of a weekly expected move, just note that this is going to be a rough one to trade, and that's why I do not trade it these days. What have we been saying about Meta? Watch out, 30-minute divergence, and that most likely is going to need to retest some key levels. That's it though, right? We're not saying this has to be some kind of massively bearish thing. It can turn into one, but as of right now, you haven't even lost the 5, and the 30-minute could just curl up into positive territory, and guess what? You might even test that high. You might even go make a new one. That's why we have weekly expected moves on Patreon down in the description for you guys, right? Now the 2-hour, I just want to talk about this. This is something that is saying this can be a little bit worse, but it's not the best signal in the world. It's really tight and it's really high up on the MACD, meaning we have a lot of time to base out at some point, see a little 30-minute divergence, and then see this thing turn up. And here's the other thing. If we really pay attention to this 30-minute, I would be a little bit open to this 30-minute if it makes a move higher fading, just because of where you reacted to. You're at a very key level. You see a left, you see a head, you could see a tight right shoulder, and that could be a problem for more of a 2-hour pullback. So the real opportunity, we're going to talk about that again here with Meta, is the opportunity right now? Well, if I'm a small 30-minute trader, maybe. But if I'm someone who plays this and wants to play a little bit less risky, I might open up to a 2-hour. I might see when that's by the center line and then go look and see, is the simple swing trade on? Did it confirm all my swing trade signals? Right? That's why swing trading's down in the description. Now we also see if this wanted to make a different signal, right? What if this wanted to make a 30-minute divergence where this drops down again, then makes a strong base, and you see that confirm back up into positive territory? That would really signal the next 2-hour move is going higher, and then I'd watch out for a 2-hour divergence because that could be the last trap in December, and that's something we really want to pay attention to going forward. So Meta, it's a great move. It's very, very bullish. You see, we have to be open to a lot of positivity, but we can see very clearly of how it wants to react when the opportunity might actually be there, and that would be a 2-hour further pullback from here. If it just wants to cross up, it might be a little opportunity, but I'm waiting and being patient for the 2-hour pullback. It's time for AMC and GME, and we have updated those levels, 529 to the upside. If you want to get the downside range, you got to join Patreon. That's the link down in the description, but we give half of the data away for free, and if you're really smart, you can calculate this really easily because we have a very easy way to do that if you get one of the ranges. So AMC, you got to break through 529 to see some craziness. The thing that I'm noticing with AMC is even though the price is going down, I don't know if it's spoofing. I don't know if it's just people buying it because it's cheap, but the demand for calls seems to be going up from what I see. So that's very interesting to me. Now, I want to be very clear. This is a very bad signal. This means that AMC is very likely to keep dropping. But we have that 200. If we can find support early, that'd be great. But this is where things start to go, oh, a daily pullback might be happening before we actually get the next upside move. And the reason that I'm saying the next upside move and not saying this is going to absolutely tank just yet, right? That can happen, but I'd have to see that cross the center line really to be convinced. This, it has no divergence above it. And we didn't even get that strong of a move according to the RSI on the daily scale. So this could just be a daily pullback to really shake you out before something crazy happens. That's what I would pay attention to for AMC. Am I selling any of my AMC with this? No, I'm going to see what happens with this GameStop earnings. And as my options are up 100% right now, I'm not necessarily the most inclined to sell on this big drop. So that's what I'd pay attention to. Just another note, this is a very bad signal to see. You need to whip that back around. You need the daily positive, 2-hour positive, and the 30-minute positive. Then you can see some good stuff. GME already did that bad signal, and you might be getting some kind of ABC pattern down right now. You really might, but we tested top Bollinger. Maybe we're just reacting to the 20. If the daily can confirm up, that would be a good sign. If you look at the 2-hour, this is where the ABC pattern would be very nice to you, because you're making a pretty damn obvious cup and a pretty damn obvious handle. And even if you wanted to call it, I don't know, head and shoulders at this point, I mean, you can call it whatever you want. Just note that this is not what you want to see for this to head up. If this is going to confirm down on the 2-hour, watch if that is quick and if it sets up some kind of 2-hour divergence during the day tomorrow. That'll be something very interesting, and that will be a good signal going into the end of the day. We will pay attention to it in the morning with you for GameStop, okay? During our live video, guys, we do talk about GameStop, so just come in and ask if you want us to check on it. 34.90 is what you need to break through to see something crazy. And we all remember how AMC reacted around its weekly expected move last week. It shot up to it, and everyone got excited. Everyone got really, really bullish, and I said, watch out, there's a weekly expected move at 550, and that's exactly where it started to tank. These are the best support and resistance levels you are ever going to get. The Patreon link is down in the description, and you can even take the course down in the description, the full technical analysis course, and we'll teach you about these ranges and teach you how to create your own ranges using simple methods on any trading platform. There are two things that I wanted to talk about at the end of this video, and you stuck around, so thank you so much for that. Very good of you to stick around to the... If you are someone who is diligently sticking around to the end of the video, you have the best probability of learning from this channel. You have the best probability of taking away the full amount of info from each video, and the dollar and volatility are two things to really pay attention to. Two things happening here. Remember what we talked about. We might need to see this 2-hour divergence on Dixie before that is able to really confirm up. But as of right now, the 4-hour has confirmed the divergence. That's very, very huge, because that means we are most likely about to turn up on a daily scale. And you are taking back that 9-day moving average right now. So the dollar is starting to move up, and notice that the market is moving down. That is the correct correlation that kind of flipped this morning and then flipped right back towards the end of the day. This is important to watch, because why are people about to flock into the dollar? If you want to go into Saturday's video where we talked about the monthly scale for the dollar, it is showing that people are most likely about to fly into cash in 2025, so be cautious. But the 2-hour divergence here. So let's get really into this. When is this going to react? Well, you're kind of in a spot where it can go either way right now. You're really close to the center line. The good part is you rejected this. You created a higher low, and then you started to curl back up. So you might not even make this 2-hour divergence. What I'm saying is, this could be a cup and handle, or some kind of consolidation to break through resistance right now. And therefore, the dollar could start screaming higher tomorrow. So it means be on your best behavior tomorrow, right? Really be trading like water, really be managing risk and watching the dollar. And we'll check on that in the morning with you. Now, volatility, another reason that you really have to be aware here is we told you about the 2-hour divergence that was here. That confirmed overnight. We didn't see a lot of downward price action, but notice by the end of the day, we're starting to see some downside. The key thing is the daily has not confirmed up here. So I want you to pay attention to that. The daily has not confirmed up here, and I am still leaning towards the dollar actually getting down to 12.12, barring some kind of black swan. If we just see this thing rip off and get above 20 all of a sudden and start to confirm up on bigger time frames than the daily, that'll be a big deal. The monthly scale starts to rip back up and go positive. That'll be big. But I think we we have the opportunity to see a reaction in volatility, and then we actually see that drop off, and we may even get a few touches down here, and watch out for January. Really, if we're going to set this up, this is the real way I think we head higher into 2025 and get some kind of Santa rally. I think we see a quick corrective move that then fails, and then we start to see people get greedy down towards 1212 with their option plays, because that's what the volatility index does track. So what we want to pay attention to is the fact that the daily does not have the best divergence on the MACD and RSI at the same time, and this is really far away from the center line. This would take like 4 days of selling to really get past that center line. So a likely thing is we get a reaction, then we turn down and create a divergence that really traps people at the end of the year, and maybe even we get a triple divergence that gets us really close to the center line. That's what I'm paying attention to for volatility. But just a note for the days ahead, you had a reaction of about 11%. So a stat that you need to understand for the VIX is when you are up by 10% on volatility and the market's going down, right? You have 2 trading sessions and you have an 85% chance in those 2 trading sessions to see some kind of up day in the SPY and some kind of down day for volatility. That does not mean that it has to be some kind of massive bullish thing. It could be consolidative. It could be a reach up to grab liquidity like we could do tomorrow at that daily expected move for the SPY. So just be cautious with it, but understand that you have to be open to, if you see something scary here, but you see reversal signals, just watch, because you might actually end up going higher in this very bullish market into the end of the year. So the main takeaway here is we're looking for, if we're going to retest that 20, if we're going to go a little bit deeper and really scare some people, and we still have a monthly expected move to help us out. We have a little zone down here in case we see something ugly and really want to confirm down this daily chart before curling back up towards the end of December, and then we'll watch out for the big downturn. I think we have the chance for volatility to pick up and we see some selling maybe down to the 20, but I do not see the reversal signals I need to see on the daily in order to say this can be some kind of bigger correction or stock market crash. So just take that for what you will, play the signals, trade like water, manage risk, and you'll be just fine. Okay, thank you guys so much for watching. Really do appreciate you watching to the end of the video, liking it, subscribing, doing all that good stuff. Love doing this for you guys, and I love to show up in the morning and talk about how that open reacts. So join us live tomorrow morning, and I will be coffeeed up and ready to go. I hope you are going to be ready to go as well. Thank you guys for watching. Have a great night, and I'm out of here. Peace.